Students of the CTKS method focus on doing the cheat sheet because this just indicates if the engine of financial markets is overheating, if it's spluttering, if it's about to blow up, so many different things. And a cheat sheet is throwing some really weird signals that you need to be aware of. In this video, I'll go through the latest news and then go through the cheat sheet and let you know what you need to pay attention to. It's very important in the next 24 hours. Let's get into it and let's run the numbers. The Fed cut interest rates as expected. It created quite a bit of turbulence inside the markets. The markets went up, came down, scooted down, and then basically flatlined. Hence, we're getting no fireworks headlines. Fortunately, the fireworks has not been to the downside. Well, unfortunately, not to the upside as well. When we look across the main markets, we can see very small percentage losses and very small percent gains. What's really interesting is that VIX came down. A lot of people would anticipate that gold will go absolutely nuts on Fed rate cuts. After all, that's what they are told. But what actually happened, it went the other way. Two more rate cuts are anticipated, and already at the next FOMC meeting, we've got an 87.7% probability of a 25 basis point decrease. We're looking at 2 cuts into the end of the year. Looking at sector performance, all sectors were just moderately down, 0.10%. The Fear and Greed Index is currently 57 for the stock market. Looking across all US markets, Nvidia took a hit in the past session. In terms of the S&P 500, this is yesterday's trading session. We saw pretty much red across the board. Inside Canada, the Canadian companies were fairly mixed. China's companies relatively mixed as well, producer manufacturing doing quite well. And looking across all the European Union companies, we saw a bit of red in the finance field, a little bit of green in tech services. The Crypto Fear and Greed Index is currently 51. When we look backwards throughout time, we can see when it gets around that 51 area, it can get really volatile to both the upside and to the downside. This is something to always be aware of. Dealing with volatility is never easy. That's why I put together a playlist for you. There's a variety of different tunes in here that will just set you head and shoulders apart from other people. In your regular everyday life, and of course, inside your trading and investing. If you just go to @CTKS Method on YouTube, go down to the playlist, and this CTKS Trading and Investing music is absolutely sensational for your mindset. In terms of economic data releases, we're all through the really big ones, except of course for unemployment claims. But after that, this week settles down. Inside the crypto market, in the past 24 hours, Bitcoin is down just moderately, 0.42% down. Ether's a little over 1.2% up, and we can see that the majors haven't done really that much at all. The greatest gainers in the past 24 hours are not really that great. We've got a couple of memes, some Ethereum plays. And looking at the greatest losers over the past 24 hours, they're not really that much. The crypto market is basically on pause. This is pretty much the information that most investors and traders use to make decisions. Is it green? I'll buy it. Is it red? I'll sell it. Getting your mindset correct and learning how to stack probabilities is incredibly important. Let's dig deeper underneath all of this, so we can figure out what's actually happening inside the markets. And if you like this kind of content, please make sure to smash that like button and don't forget to subscribe. We have one of the best communities on YouTube, and we'd love to have you as a part of our global family. When looking at ETF net flows across both Bitcoin and Ethereum, we can see the net flows are decreasing. Typically, we want to see the flow of funds into the ETFs increasing to support price. Now, talking about the Bitcoin monthly returns for September, which is generally a really red month, but not always, we've got nearly 7% for Bitcoin. And for Ethereum, a staggering 3.11% up. Just remember, price is always moving in a wave. We can't just say, well, what happened in the past will always happen. We've got to just be responsive to price action and stack probabilities. Looking at liquidations across the past 24 hours, 330 million. We've seen over the past couple of days so many long liquidations and so few short liquidations. We're starting to see more long liquidations. This gives you a bit of a concept right there. Turning to Bitcoin, we're in a current uptrend, and the FOMC just caused a little bit of volatility as we anticipated, and now that's been bought up. The crypto market is positive at the current time. And don't forget, if you have a bullish bias, you're very early, and if you have a bearish bias, you need to keep your eye on that 114. Looking across global markets, we see quite a degree of support. The outlier is, of course, Germany at the current time. It's weakening. Against that backdrop, we need to look into the mechanics of the market through the cheat sheet. The cheat sheet is 7 rows. Row 1 and row 2 are especially important. If you think of the market like a car, row 1 and row 2 give you an indication if the motor is just starting to give out, it's revving, it's dying. Row 1 and row 2 are the engines. Seeing if the engine is starting to splutter is really important. Inside row 1, we're looking at the VIX, the volatility gauge, the DXY US dollar currency index, Japanese yen, dollar yen, 10-year, 2-year, and oil. What we saw in the past trading session was basically that the VIX came down. Now it spiked up and then came down. And we can see Bitcoin is really quite bizarre here at the current time. Generally, the VIX inverts Bitcoin's price momentum, but that hasn't been the case recently. Bitcoin's price momentum is most closely aligning with yields and the dollar at the current time. If we get continued momentum inside the DXY and inside yields, and you can see how choppy the yields are just currently, we would anticipate negative price momentum. But if the dollar starts to come down and the yields start to come down, that will fuel crypto upwards and onwards. It's the confluence of row 1 and row 2 that gives us an insight if the engine of financial markets is starting to splutter or it's just purring along. Now, inside row 2, we look at junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. And we can already see the engine is starting to splutter. If we looked into the crypto market, we wouldn't see that right now, and I'll show you those charts a little bit later on. But when we look inside junk bonds is starting to weaken. This is typically a sign of VIX upward pressure and momentum. Not always, but we have to stack probabilities. We can see gold starting to retrace. Why? 10-year came up, 2-year came up, DXY came up, gold and silver got hit. Gold's baby brother silver is a lightweight, so when it takes a drink and it just passes out, that's because that's what it does. So for example, if the US 10-year and the US 2-year and the DXY are spiking, silver is going to get drunk and pass out first, and gold has more capacity to weather the storms. We saw inside the euro dollar, as it spiked up, it tried to go higher and then was crushed down. Why? Because the DXY and dollar yen spiked. Now, when the euro does this, this is typically not the right thing that we want to see, because these row 2, especially the Aussie dollar, especially junk bonds, especially gold, especially silver, and especially copper, are actually pointing to a weakness inside the engine. And of course, if you looked into the crypto market right now, you'd say, Ken, are you on drugs or something? The crypto market is going for it. Well, it might be going for it, but just remember, trends don't unwind in 10 seconds. Now, what does that mean? We might get upward momentum inside the crypto market, and there's been some really strange signals between the VIX and crypto as well. They need to align. We're not seeing a weird signal in terms of the main markets. Now, Dr. Copper is saying, boy oh boy, I need a break. Please let me know in the comments, what do you think of row 1 and row 2 at the current time, and what do you think that's going to mean in terms of the markets for the next 24 hours? Just take this day by day. When we're looking at row 3, we're looking at the S&P 500, the Dow Jones Industrial Average, the NAS Composite Index, and the Russell. Now, what are we seeing here? Oh, that looks seriously like a bit of a retracement. Is it a change in trend? No, not yet. It's not a change in trend. We haven't broken the uptrend. But people who are trained in the CTKS method already know that thing is weakening. What about the NASDAQ? Has it broken trend? Has it gone negative? No, it hasn't. It is still positive, but it's just weakening at the moment. And we could be having a little bit of an intention spike here. So just something to be on the radar. Now, what happens if row 2 starts to go really negative? We would expect follow through, especially if junk bond starts to come down. And that, by the way, will pull crypto down with it. But Ken, I just want crypto to go up forever and the stock market to go up forever. Well, it's just always moving in a wave. Up and down, up and down. So far, the trend is holding to the upside. We have a retracement, no change of character just yet. What about the Dow? The Dow kind of whipsawed all over the place, but that's okay, that's looking okay. What about the Russell? How's Russell going? Well, it's still supported. So we do have uptrends in play. And we're literally at the doorstep to a retracement wave if it's coming. But Ken, I need certainty. Is it here yet? No, it's not here yet. Certainty will kill your account. You need to stack probabilities. Looking at stocks on a daily basis, which is row 4, Apple, Microsoft, Strategy, Tesla, and Nvidia. What really pokes out here is the drop in Nvidia. This is a very precarious drop. And typically, when Nvidia drops, we do get follow through, so just be aware of that. Tesla has been doing incredibly well. It's just blown up, literally. Apple is just taking a bit of a breather at the moment, and you can see Microsoft has been in a bit of a downtrend for quite some time. It has some positive momentum in here at the current time. So the markets are a little bit mixed under the hood. And when we look at strategy has been declining. We've got the first stages of a sign of life. There's a huge difference between stacking probabilities and certainty. Certainty is a zone 1, zone 2 way of thinking, and that pushes people into panic and into blame. Certainty, a focus on certainty, will terrorize you. Now, why is that the case? You're trying to be certain in a price, in a market condition that does something like this. Even if it's going up, it doesn't go up in a straight line. Certainty would be, I know where it's going tomorrow, it just goes up in this straight line. But it's not like that. Even if the markets are going up, they do things like this. So your certainty will absolutely kill you. It will just stress you out. That's why inside zone 3, we deal in probabilities and rules. One of the rules is, and a very important rule, price moves in waves. If you just ride the wave of price, you're going to do really well. And price is always going up and down, up and down. Therefore, we abandon certainty because that's just another way to lose money. We want to make money. We've got to think in terms of probabilities and think in terms of rules. But when we keep the money that we make here, a lot of people will make it, lose it, make it, lose it. That is kind of zone 3. But zone 4 is where you want to inhabit, and that's what I focus on here. And if you're new to the community and you like this kind of thing, please smash that subscribe button. Become part of our global family. Looking into row 5, and all of these rows stack on each other. For example, row 5 is total crypto market cap, Ethereum, and Bitcoin. When we look at the total crypto market cap, it's looking pretty good. It is in an uptrend and it's just broken out of a very temporary resistance here. So that's pretty good stuff. What about Bitcoin? Yep, it is going up. What about ETH? Yeah, dribbling as it is. It's very early stages of going up, and it has a lot of good work to do if that upward momentum continues. Row 6, on a daily basis, Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. We can see Litecoin is in the very early stages of taking off. Bitcoin Cash a little bit stronger, Binance Coin really strong. Ethereum Classic didn't get the memo yet. Row 7 is Cardano, ADA, Solana, Sol, Dogecoin, and XRP. Looking on a daily basis, what do we see here? ADA had a really good run up and has been retracing. We can also see Solana had a really good run up, retraced, but is like a lot stronger than what ADA is at the moment. If we compare ADA and Solana, Solana is literally up around here, so that's the way that you detect strength or weakness. What about Doge? Doge is really rocked and rolled. It is very, very strong. And what about XRP? Also strong. All of these trends are in a daily uptrend. So that is pretty much looking really good for the crypto market at the current time. For our students who have done the Profiting Masterclass, please go back and look inside week 1. It's really important to just attune your mindset. For example, a lot of people right now would be saying up only, it's only going to break out, it is never going to come down, it's all fantastic. Now within the next couple of days, maybe not today, maybe not even tomorrow, but maybe after that we could see some retracements. Now, especially if the yields start to spike up, the euro continues on its downtrend, and gold and silver continue to bleed down, as well as copper. One thing to always understand, all markets are intercorrelated, which means they're just like in a big club. They're just club members. They just hang out there. Most people make a very, very bad thing and they say, oh, I'm just in Doge, I'll just look at Doge. Or I'm just in XRP, I'll just look at XRP. I don't care about yields, the DXY, VIX, bah humbug. Who cares about those things? I'll leave that to the institutions. Actually, you'll be leaving your money to the institutions if you think like that. Professional traders and investors focus more on downside risk. And if you look at some of these red candles, the red candles can really just take out so many positive days just in one hit. So being aware that price can retrace will actually benefit you greatly. In the comments, please let me know which of the CTKS trading songs really help you out. There are so many different ones in there, and they all have different functions and different purposes. But their central function is always the same, to help you out. When people are inside Zone 1 and Zone 2, what actually happens is they ignore stacking of probabilities. The blue line here is Bitcoin. And this is the S&P 500 futures, the Dow futures, the Nasdaq futures, the Russell futures. What you can see in terms of the S&P 500, and this is most closely aligned with the VIX. If the VIX moves up, the S&P 500 will move down. If the VIX moves down, the S&P 500 will move up. And this is precisely what we saw in the past 24 hours. Now, Bitcoin is following the S&P 500. If we get continued upward momentum inside Zone 2, well, Row 2, that is all good, and we would anticipate this rally to continue up. But if Row 1 starts to strengthen, we need to be careful. That's why you need to keep your eye on things. And it does matter, because what moves the S&P 500 will move crypto. And this is why we do the cheat sheet. A big thank you to everybody who reaches out and contacts me by direct message on social media. If you have any really good charts or really good data sources that you would like to send the URLs to me on social media, please do so. I'll see how I can incorporate them into the daily video. When we look at the 4 stages that all investors and traders go through, the key is to get to zone 4 as quickly as possible. This does take experience and it does take loss. Now, why does it take loss? Losses are required to push people into learning. If people just come into the markets, they just believe that they can trade with people who have been inside the markets for many, many years. And they're told by a lot of scammers, you can get X% return and 0% loss. That's not actually the way things work inside markets. You lose often because you just don't know something. And even veterans will make losses, and that is completely fine. You want to just make sure that your loss is as small as possible. Don't let your losses run. When people first get into markets, they absolutely panic because what they're told in terms of you've got money, you can make it, it's so easy, I'll just do this and yeah, you're fine. It's not actually the case. You need experience. So of course they get angry and they start looking externally. But the key is with learning, you look internally. You develop patience, you develop rules, you start stacking probabilities. You know the price is always moving in a wave, so therefore you make 3-way decisions and you're focused on percentages, and this is really important. Percentages dominate investing. But then after a while, you'll find that something is missing, and that is your mindset. That's all about zone 4. Now, inside zone 4 and with positive excellence, you won't turn into any guru figure or anything like that. And you don't need to sit cross-legged under a tree and meditate. And you won't always get everything right, and you'll still be impacted by emotion, but just to a manageable degree. Fear will be something that you lean into, not run away from. And keeping money rules is all about integrity. It's about decency. It's about kindness, strength, and boundaries. There are so many rules that you need to learn. 846 is a particularly good one. Personal wealth flows from learning lessons. Now, what's a lesson? When you make a loss inside financial markets or inside life, turn it into a lesson. Institutionalize it, which means look personally, look inwards. Don't look outwards. If you look outwards, the concept is it's so easy to blame and so easy to play the victim card. Oh, they did it to me. They caused this. They didn't cause anything. You are in control of your own life. And if you don't feel that way, making profits is really difficult. In fact, I would say one of the biggest problems is people don't get consistently profitable because they don't learn from lessons. Losses inside financial markets are not personal. It's just a lesson that you need to learn. After all, you already paid the tuition fee for it. You might as well get the value out of it. That is seriously how I look at it when I learn from lessons. And I will continue each day to find lessons to learn from. And so will you. This is normal. Everybody learns from lessons. All you need to do is to make more than you lose. And if you know the lyrics of the song, please let me know. If you've made it this far, you are an absolute legend. You've gone to legend status. So why don't we put just a little comment down, something about lessons. Lessons, I win or learn and never blame. This is a daily positive affirmation that will make you a superstar in life. Just remember, any time you pay for a loss inside the market, that is the market's tuition fee. You'll get to a point where you just don't want to pay those market taxes. And that is the point where you become consistently profitable. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.